The first atomic bomb was dropped on Hiroshima.
Only humanity!
The fires of frustration and discord are burning in every
Let us
city.
not forget for a moment the toils and efforts that lie ahead.
They say that those who forget their history are condemned to repeat it. This is the History Lessons Podcast with certified financial planning practitioner Patrick Huey, author of History Lessons for the Modern Investor, and your guide to financial wisdom in the past, present, and future. You ready? Good. Let's get historical.
Well, news out of Japan this week was hard to watch, but then again, where on earth is the news not hard to watch right now? Anyway, there the ground shakes, sirens go off, tsunami alerts hit phones and loudspeakers, trains stop, people head for higher ground, even when, at first glance, the damage isn't obvious. Now, if you lived through 2011, you don't wait to see a wave before you move. You assume the risk is real, and you act accordingly. Your financial life has its own version of that. Most of the time, things feel routine. Your paychecks arrive, markets drift, the news is just background noise. And then something jolts the system. Something like, well, war headlines, an energy shock, a sudden dip in part of the economy. It's tempting either to shrug it off completely or to panic and run for those metaphorical hills by selling everything. Both extremes are a problem because the goal isn't to pretend that the ground never moves. It's to make sure your buildings are up to code before it does. A portfolio that isn't relying on one fragile sector or a single stock to hold everything up. A portfolio that has enough cash and high quality bonds so you don't have to sell good assets in a bad moment. And insurance, estate documents, and a basic plan that your family understands if something hits closer to home. When Japan's alerts go out, they're not saying, buckle up, the whole country's going to be gone. They're saying, we live in a risky place, so act like it. And yeah, markets are similar. We invest in a world where shocks happen, geopolitical, economic, personal. You don't need to evacuate every time a headline drops. You do need a structure that can flex, absorb a little shaking, and still be standing when things settle. If you get that part right, you can respond to the next tremor with calm adjustments instead of last-minute scrambling. After the break, I'm back with this week's history lesson for the modern investor.
This episode is sponsored by Victory Independent Planning. At VIP, our mission is simple. Live well, do good. We build strong relationships with good people and help them turn money into what really matters. Retiring without worry, traveling more, supporting family, or funding the causes and projects they care about most. Based in Naples, Florida, and Portland, Oregon, we serve clients nationwide with comprehensive fiduciary advice, retirement income planning, custom investment portfolios, tax strategy, healthcare and Medicare decisions, and estate and legacy planning, all carefully organized around your unique goals. If you're ready for a plan that puts your best interests first, visit victoryindependentplanning.com and schedule your VIP consultation.
On April 24th, 1990, the Hubble Space Telescope launches. This week we're talking about blurry starts, course corrections, and seeing the big picture. On April 24th, 1990, the Space Shuttle Discovery lifted off from Cape Canaveral carrying a passenger that was never meant to come home. and that was the Hubble Space Telescope.
Here I am on the space shuttle orbiting Earth.
After decades of planning and budget fights, NASA was finally putting a powerful observatory above Earth's atmosphere where it could see the universe with unprecedented clarity. The idea was elegant. Our atmosphere, which makes life possible, also distorts starlight. So if you put a telescope in orbit and you remove the shimmer, opening up a clearer view of galaxies, nebula, and the early universe itself. Well, the launch went smoothly, the deployment went smoothly, and Hubble settled into orbit. Instruments powered up, and then the first images came back fuzzy. A flaw in the main mirror, off by less than the width of a human hair, meant the telescope could not focus properly. After all the cost, all the speeches, all the build-up, the flagship of modern astronomy had astigmatism. The jokes came thick and fast. They called it the Hubble trouble, in comparisons to an expensive broken pair of glasses.
I can't see a thing without my glasses.
For a while, it looked like an extraordinarily costly embarrassment. And then we get something less dramatic but more impressive. Engineers and scientists went to work on a fix. Yeah, they couldn't bring Hubble home, but they could design corrective optics, essentially spaceborne contact lenses, and they could send astronauts to install them. In December 1993, a shuttle crew performed a series of complex spacewalks, swapping instruments and bolting in new components. And when the upgraded telescope came back online, the difference was stunning. The same observatory that once produced blurry blobs now delivered razor-sharp images of the cosmos. Over the following decades, Hubble helped measure the expansion rate of the universe, refine our estimates of its age, and give the public iconic views like the pillars of creation. A tiny initial error discovered in full view of the world did not doom this mission, and a thoughtful correction turned it into one of the most successful scientific projects in human history. Here then are 4 lessons for the modern investor from the Hubble trouble. There are a few obvious parallels for investors and retirees. And the first is that even well-designed plans can launch with flaws. Yeah, you can do your homework, you can save diligently, you can pick reasonable investments, and only later discover that a key assumption was off. Maybe you took more risk than you can sleep with. Maybe you underestimated how much you'd actually spend in retirement, or you concentrated too heavily in one company or industry. The instincts in those moments are interesting. They're often shame or denial, either pretending nothing's wrong or scrapping the whole thing in a huff. But Hubble's story suggests a better middle path. Acknowledge the error, and then focus on the specific, often modest changes that can correct your trajectory without abandoning your destination. A second lesson is about where to put that lens. Before Hubble, our view of the universe was limited by distortion right in front of us. Once the telescope was above the atmosphere, we could see much farther and more clearly, but only after we fixed the mirror. So in financial terms, the atmosphere is your day-to-day noise, headlines, short-term market moves, other people's opinions. The mirror is your own bias, overconfidence, fear, recency bias. If your field of view is dominated by this month's return or this week's news, everything looks chaotic, close, and fuzzy. But when you build a plan around your real-time horizon, 10, 20, 30 years, and correct for your own blind spots, the picture changes. Volatility becomes a feature of a much larger landscape and not the whole story. Hubble also reminds us that some of the most valuable information comes from compounding observations over time. A single image is beautiful. A long series of measurements That's powerful. In portfolios, we often celebrate or mourn individual years. Great year, terrible year. But what really matters is the chain of returns and behaviors over decades. Regular contributions, periodic rebalancing, staying invested through downturns, making gradual improvements to your fee and tax situations. Those are the equivalent of long exposure on a distant galaxy. Each one doesn't look like much, but together they reveal structure and depth that you just can't see up close. And finally, there's something to be said about humility and course corrections. NASA could have insisted that the original mirror was good enough or hidden behind PR spin, but instead they admitted the problem, brought in outside reviewers, and devoted serious resources to fixing it. In your own financial life, humility might mean getting a second opinion on a complex strategy, revisiting a long-held assumption about retirement age or spending, or being willing to shift from a do-it-yourself approach to a more collaborative one as life gets more complicated. Admitting that your original design needs adjustment is not a failure. It's often what makes long-term success even possible. Here's my final thought this week. When you look at a Hubble image now, you don't see the flawed mirror. You see the corrected cumulative result of thousands of small decisions, along with a willingness to fix what was wrong. Your financial life will never hang in a museum, but the same principle applies. The aim is not to launch a perfect plan on day one. It's to get into orbit with a reasonable design, pay attention to what reality tells you, and be willing to install a few lenses along the way so that over time you can see and reach farther than you originally thought possible.